And let's go over to the natural gas chart. And here we have weekly on the left and daily on the right. For those of you that are brand new, we're cycle analysts. We look at the market rhythms. And that is the essentially heartbeat of the market. That's money flows seen in a visual way. And what we try to do is then project using not only these money flows, but our indicators, which are momentum indicators and support and resistance levels to help us get a good idea. So when you look at this natural gas chart, you could see really very, very good cycles that appear in here. The brackets that you see in the bottom, in this case, there are three cycles, three different periods available in each of those harmonic families. And that is giving you a good look at a dominant cycle, a minor half, and a really minor quarter cycle right there. And all of them have really good alignments. You can see that where two of the three were coming down here, that brought a correction. But the dominant one still obviously was giving an upward force because the low was higher. So you have a positively configured cycle. It suggests that the next rally is going to get to a higher high, and that's what happened. In this case, you have something different. You have this intermediate cycle right over there giving you a lower low. And being that the low broke right over here, we believed that the rally would fail in resistance, and you see that happened exactly. When the reversal scout then turned down right over there, and I'm going to zoom in a little closer for you to see, then that gave us the indication it was likely to decline into this period right in here. This is the cycle low timing. Katie does a great job. She has a cycle low timing tracker that she puts together with all of these dates. And so we were expecting that the natural gas market would decline into this time period. Then we say to ourselves, well, what will then end that decline? What would get us into that next? And you can see we have right there an indication of there's likely going to be an upward turn right over there. When it's gray like this, it just gives you a sense that we're kind of anticipating that right there, not up to any specific levels yet. But then when I look here at the daily chart, and you can see here that the daily chart was coming down into the same time period. So again, you could see the cyclic rhythms that are in there and how beautiful they are on the daily chart. Now here, what I'm going to add in is looking at, well, not only the reversal scout here, but the slim ribbon PO on the bottom. So the slim ribbon PO, the reversal scout, those are level 4 indicators for us. And the PO, you could see right over there, the slim ribbon PO, giving those signals of not only being red or negative, but also resumptions for the momentum, which are those down arrows. And you can see how extremely valuable that is. Look at the upward resumptions here on the green arrows, and you could see how the market moved back up. So this is a fantastic indicator. If you're interested in that, of course, write to Matt at askSlim.com. He'll tell you about the level 4 memberships. This is now, you could see a rising phase lining up here with the rising phase lining up here after this a minor and intermediate trough right there. So it troughs right over here, it troughs on the daily. So we're anticipating that there's going to be a bounce right there. And the question is, well, did the bounce start? You could see a few up days right in here, but none of this really gives us a sense it gets any good upside traction until the momentum tells us that it actually is improving. Momentum, of course, very negative here, and it's early. So for this to be turning up, look on the bottom here. You see this red dots down there? That's the option bias indicator. So if you were in an option position and you wanted to decide what your directional decisions are going to be, how you're going to bias your option positions, of course, this helps you with that and tells you that this is negative. Note there was a little bit of a whipsaw here where that turned green on that big upside spike, but within 2 days it turned neutral again. So that was kind of a warning. Occasionally you get something like that, but overall it's going to keep you on the correct side for your option positions. Bottom potentially forming right in here, bottom potentially forming right in there. And that is a good reason to believe that there's going to be some attempted upsides. So what we do is we take the distance between this peak here and the cycle trough right over here, assuming it's established, and then we create the resistance areas. The lowest resistance here is at a 38.2% retracement of this distance, and that brings you up to a potential of about 3.46. We'll give it up to about 3.65. That is where the potential bounce is. But if you look at this overall bigger pattern in here, it really says that there's a good possibility that there's going to be rallies that fail all the way out into February of 26. So here we're into this period of a minor rising phase, an intermediate rising phase on the weekly, fighting against negative conditions on the bigger pattern. That stops the rallies on the upside. That means if you were projecting an upside bounce and playing it, you would then respect the resistances here on the daily chart. So it gives you a good sense for how we use this information to come up with the sum of the evidence. And the sum of the evidence right now is that potential bounce up into this area, but overall in intermediate to longer term, it's not in great shape in the natural gas market. So I hope that was a good primer for you, a good introductory lesson there. We also got a question here on the bond market. I'm going to go to the TNX, and I'm looking at 10-year yields right here. So when I look at the 10-year yields, look at the cyclicality here. It is just absolutely beautiful, as you can see, each of those rhythms in there. So that gives me a good sense for a dominant and a minor cycle, and you can see how that lays out in here. Again, if you're brand new and you're not understanding cycle analysis, then please go to our top of our webpage to where it says workshops. There's a free video in there in the cycle analysis workshop and some other information, and you can start to learn more about cycle analysis. So this pattern is suggestive, if you believe in these beautiful rhythms, which certainly I do, that there's an intermediate low right over here coming, or a continued downward movement in yield that takes you somewhere out to first, second, third week of September. That should give you a lift in the bond market into that same time frame. If yields are going to fall, and of course we know that into that September period, it's very likely we're going to get a the Fed moving to cut interest rates at that point. I'll talk a little bit more about that in a moment. Then that's an indication that we should be getting a lift in the bond market into that September period. Let's take a look at the daily chart right over here, and you can see what's going on after this negative cycle right over there. It said, probably the next rally in yields would come into that area. You note in there that I had a note, and that is if yields popped up into this area, it's resistance and you buy treasuries. So that's what I had as the note to our members. And so it's gotten into this area for buying treasuries. So here's this area where there's a sink between the weekly and daily, and that says that yields should fall in here and the bond market should be moving up. So that's my analysis of yields. Now, you asked me about ZB, Regis, so we'll take a look at the ZB here, which should be opposite of what I just said. In other words, where yields falling, bonds should be rallying. So right now, bonds have been pretty much stalled in here. And this is kind of the upside target into this September period that we're talking about. So for the ZBs, this is 1602. This area right over here is about 1720. So that's my upside target for the next few weeks in there. If I look at the daily chart right here, then I look at the resistance right over here, that's 1704 right there, and an extreme level up over here around over 19. I have some doubts about it getting there. Here you could see there's overlapping or out of phase cyclical patterns in here. So cycles don't always line up on the harmonics perfectly. Sometimes you see cycles that are out of phase and they show up, and then we put them on the chart so that we can understand what's going on better. In this case, this says that There's probably a little downward motion right over here. This might give us a little bit of a buying opportunity, but then this rally out over here takes you into that mid-September period. So maybe it flounders in here, and then you get the rally up in here from the end of August into mid-September. If we got a break below this support level right over there at that low, that would warn me that something different was going on. And, right now it doesn't really look like that's really an issue. I'm just going to grab this line right over here so that I can put that in there, and you can see where that support is coming right across there. So you'd have to dip all the way down underneath that level to make me believe we weren't going to get the rally into September. I really don't think that's going to be the case. If anything, I could put in some supports in here that I think are a buy zone right there. So this right over here, it's already in the buy zone right there. I'm just going to duplicate this. And you can see where I'm putting in the buy zones right over here. There you could see the buy zones right in there. And they were in there right now. Colors are not the way I like them perfectly, but not bad. Let's put that in there. Let me just fix this. Sorry I'm doing that all in front of you, but I like it to be neat. So there's your buy zone right over there. And I think that if we got a decline into this area, which we're already in, of course, that would be a pretty good spot. So I like what I'm seeing in here. I think the bond market is going to be moving up again. Some of the evidence says that the pullback in here is occurring during a time frame where yields should be falling, so that this decline in the bond market is likely setting up an opportunity for a long side move into that period into mid-September. So that's the bond market. And that's the natural gas market. I took care of those. Let me see if I have any other questions for me before I turn this over. And DJV, you were asking me about IWM. I'm going to put up the RUT in just a little bit, and I'll be able to answer that question. And I'm going to turn this over to the team to look at two or three symbols that they had questions on.
Let's go ahead and pop over Slim to the MSTR chart, and I'm going to hand this off. All right, so this is not a good looking chart right here in MSTR. You can see that we formed our low back here, right? And then we moved back to new swing highs. But then after that, zero follow through, and then we have sold off. So at
I'm
this
not sure. I
point,
don't see your chart. I just want to make sure it's
not able to see. Let me see here.
you
I
see it,
think it's
Katie?
there.
I'm seeing it.
Okay, good.
You just have to
Okay.
tab over.
Yeah, okay.
All right, cool. So, what I'll be looking for at this point, now that we actually have moved through this little low, is for a lower high to form, and then for this to really move down. You can see there is no low that is due here for another few months. Okay, on the shorter time frame chart, we did try to move through to new high ground here, failed, rolled over, and then a lower high that formed, and now a lower low versus this old low. So what really looks like the highest odds are, again, a lower high here to form, and then for this to roll back down into that trough that is due there, as you can see, and then one more lower high here, and then a low that forms when that next trough is due out here. Okay, so this is not a good chart at all, and we have this really on our short list in MSTR. Okay, and I'm going to go ahead and
There's
hand this off to Katie.
before you
Go
turn that
ahead, go
over, a
ahead.
really
Yeah,
interesting thing about MSTR.
yeah,
MSTR is really, strategy, MicroStrategy. It's all about Michael Saylor
right,
buying
right.
massive amounts of Bitcoin.
Mm-hmm.
The problem is that Bitcoin has got a problem now. And Bitcoin's problem is Ethereum,
Right.
because once they passed the stablecoin bill, that meant that there could be massive amount of money transfers that on services that are built on Ethereum, and that kills any thought of any utility in Bitcoin. So Bitcoin is, if you believe in a store of value, then Bitcoin has value. But I think it just made a double top. And I think it's because Ethereum, I have no idea where Ethereum's going. I have no reason to be anything but bullish in Ethereum. But I think that Bitcoin has got a real problem. And I think that investors are seeing that and sneaking out of MSTR.
Exactly. Yep. Agree with you.
Yeah,
Yep. Very interesting chart.
yeah.
All right, Katie. I'll go ahead and hand this off to you.
Okay, great. So Tesla has been just moving sideways here for quite a few months. You've got kind of a wedge-shaped pattern forming, and we have a cycle trough that is due coming up. Let's see when this is, 9/29 to 11/7. And you can see that after we had this big move up into the middle of the resistance zone, that the momentum has just been waffling back and forth, positive, positive now on the reversal scout. Still with this wedge formation, I've just got this projected down here into the top of the support zone, perhaps down into the middle. That's going to line up probably with earnings coming out. And let's switch over to the daily chart and I will zoom in. So we are about to enter the daily cycle timing window. We had a peak form here, really close to this 78.6% fib off of this move right here. And now we are already approaching the top of this support zone. So maybe that we get down a little bit lower or even into the bottom of the support zone here before a move, another attempt to the upside. However, we have these two cycles here, which are in sync. What that means is that their troughs, for example, this one is due to have an ideal trough on October 6th, plus or minus about 3 days. And that time frame fits within this weekly cycle timing window. So these both are in sync cycles, and we could get a synced intermediate and short-term trough in either this first cycle right here at the end of this one or at the end of the next one. So this cycle, if it shows strength, then we would expect the intermediate trough and short-term trough to come with this one. However, it gets a little bit more questionable if this one also shows weakness. That doesn't mean that that is the intermediate trough. We could still see further weakness going out into that one. So it'll be important to watch both of these cycles and see where that intermediate trough does form, and Tesla should be able to do better at that time. The next one that I'm going to look at is IONQ, I believe is how you pronounce this. It is a company that's in the computer hardware category. And here we had a very steep decline, then a bounce back up to the 78.6% fib in this cycle that we're in now. It was not able to sustain a rally above that level. You can see it kept getting selling pressure here. And now we do have a weekly cycle timing window that's coming up between 9/29 and 11/7. Momentum has turned negative. So I have a projection here to the top of the support zone that is at 3708, perhaps down the middle of the support zone, 3341. So that is our initial target there. And if we look over at the daily chart, you can see that it tried to get back up to those prior cycle peaks. These are lower highs that are forming. And so here is an in-sync cycle. This is 9/23 to 10/2. And basically the cycle low support down to this level right here is that support zone from the weekly chart, and that is where we are projecting. So, we've got momentum switching back and forth in here, but generally as it moves sideways here, eventually we would expect it to be able to achieve these levels down on the short side. Someone asked for Intel. You zoom in here. Intel just had a giant move up this week towards the 78.6% fib of this move right here. And so with quite a while to go left in the cycle, I've got a projection out back over to that prior cycle peak, 2755. And who knows, maybe it can get even higher than that. Our timing window is a little bit later than a lot of the other ones that we're looking at. This one runs 11:17 to 12:26. Over on the daily chart, you can see just the sideways movement here. We've got quite a range going. And this big pop up has positive momentum now. Here's that 78.6% fib from the weekly chart. Our next level up in this cycle would be $26.41. That is this prior cycle peak from back in March. And then there is the other one at 27.55. So looking for a little bit higher in here, some kind of a retracement in this timing window, 9.4 to 9.12, and then further up. We did have a couple of chart requests come in yesterday, and that would be OIH, which was a monthly cycle request, monthly and intermediate. So what I have down here is this black cycle is OIH, and I have overlaid the crude oil cycle. So you can see that this crude oil cycle really does have an effect here. It makes kind of a dip with the crude oil trough. Same thing here, same thing here. And then we got the cycle trough, the most recent cycle trough of OIH just here. So we are moving up. We have not been able to switch to positive momentum yet. This is still pretty weak. And we have a crude oil that has an ideal cycle trough coming up in the late winter, perhaps beginning of next year timeframe. So this may not be able to make much traction on the long-term chart, and that is why I've kind of got this flat projection level. If it is able to make some upside move, then it might be out when crude oil starts to have a rising phase. So the top of this resistance zone here would be at 291.35, but that's looking more likely for the later part of the cycle. The intermediate, let me zoom in here. And you can see we've already had a switch over to negative momentum. No levels have been violated here. This is just kind of sideways movement. If you want to look over at the daily chart is where you can really see the weakness that's starting to develop. We got down back over to this cycle low support here, move up into the sell zone, the resistance zone here, just still moving sideways. So this is going to, looks like it's going to shape up to be either a negatively configured cycle or at least neutral. So there is weakness that is starting to develop in here. So if OIH is not able to recover, then we're just going to see some downward movement in here. And that is why this long-term chart may not be able to show much improvement for quite a while. And the other one is in a similar category, XOP, oil and gas sector ETF. Again, I have XOP as the black cycle bracket and crude oil is the red one, and they track each other very closely. So this one had to move up to the top of the resistance zone, broke below to the 127.2% extension, now getting a bounce, but out here in the February timeframe is when we are expecting the synced long-term and intermediate term troughs to form. So even though this has switched to positive momentum, it is just very slight, and we would expect a move back down into this range. Here is the intermediate cycle. And you can see that we have a momentum that has switched to negative. Here's our trough is due out in February. I just showed you that also on the monthly chart. And on the daily, you can see that this is actually looking quite bad. We've broken below the cycle low support, now getting a bounce up into this sell zone. So this could be a good shorting opportunity for near and short-term traders. If you start to see momentum switch back to negative on the lower time frame charts, such as the 2-hour chart, this could be a good shorting opportunity into this timing window between 9.3 and 9.11. So with that having been said, XOP may not be able to get much traction going here, and therefore this would show that weakness going into the long-term February timeframe for a trough in XOP, along with crude oil.
One comment I have, you showed the Intel chart and that big upside move that we had in there. That is because President Trump said that he wants the government to take an equity stake in Intel. And that's because it's floundering so much, and they say it has national security issues. I think it's total garbage. I can't stand it when the government takes any piece of any company, like they did when they bailed out GM all those years ago. So I can't hold back a negative comment on that, and I think there's going to be a lot of pushback on that, and I wouldn't be surprised to see Intel give up some of that gain that it had based on that news. So. It certainly isn't because Intel is doing anything better. They have fallen way, way behind in this world of AI. So